What's going on, guys? My name is D Anthony with evolutiontraders.com, and in this video I'm going to show you guys how you guys can make a killing day after day scalping options or stocks even in a bear market. So this strategy is going to be for beginners or people who have been trading for a long time. Anyone can implement this strategy. If you think about a strategy, think about it in a sense where every different strategy or indicator or trading plan that you kind of have or rule of trading is another tool in your belt. If you imagine a construction worker that has a tool belt around their around their waist, they don't just carry one tool, they have a whole bag of tricks. So with that being said, in this strategy, this is going to be implementing the 2-minute time frame. And why is that? Because when we implement the 2-minute time frame, we are just talking about strategy or about scalping in this video strategy. So when we talk about scalping, we are not ever looking to catch the whole move. What we are looking to do is get into a trade with based on a technical setup that has an opportunity to generate us cash. And when we get that cash, we want to sell out of that position. So obviously everyone's account size is going to be a little bit different. Some of you guys are going to have a much larger account and able to take more day trades. Some of you guys are going to have a smaller account and maybe only able to take 1 to 2, 3 trades a day. Whatever your account size is, this strategy will work for you. The only thing that is going to be a little bit different and vary is how much you'll be able to make in a single day based on your account size. So with that being said, let me kind of give a little background as to what is the difference between a scalp and a day trade, because I've seen some people out there kind of just correlate everything together, meaning that, you know, if you're scalping, you're a day trader. If you're day trading, maybe you scalp, maybe you do both. But the difference between a day trade and a scalp is when you scalp normally, okay, normally someone who is scalping is going to go in with a larger position sizing. What does that mean? That doesn't mean that you need $100,000 in your trading account to scalp. But what it means is that, let's say you have $1,000 to actively trade with. Let's say you have a $10,000 account and you're going to risk $1,000 per trade. Normally, a scalper will look to take $1,000 worth of, let's say, options contracts. Let's talk about options. So I'm an options trader. I'm very familiar with the way options move and the premium, so forth and so forth. Let's say I have a $10,000 account and I'm willing to risk. Again, risk is subjective to everyone. So everyone's going to have a different risk tolerance. Obviously, risking $1,000 on a $10,000 account is 10% of your account per trade. Okay, so a lot of people will say, well, you're not supposed to risk more than 1 to 2% of your account size per any trade. Yeah, if you don't have a stop loss, if you don't have a strategy, if you don't know what the heck you're doing, you're not just going to throw down $1,000 and say, either I'm going to win the lottery or I'm going to let it all, be gone. Okay, I'm never going to take 10% of my account and risk the entire amount to try to make some money on it, because if that trade goes sideways, I'm not willing to lose that $1,000. So what exactly does that mean? It means that you need a strategy, and you need a strategy that's going to have a tight stop loss. So with that being said, what we're going to do is use the 9EMA, okay, the exponential moving average. This is going to be a faster moving average, means it's going to be a lot more tight to the current price action, and we're going to use a 2-minute time frame. The reason why we're going to use 2-minute time frames is because if the trade does go against us, meaning the trade fails or it stalls out or it's just a bad trade altogether, we can quickly exit that trade and only take a small loss instead of entering into a trade and having no idea where you're going to stop out at, or telling yourself you're going to scalp, but then next thing you know, you're sitting there 4 hours later, still in drawdown, still holding that same trade, hoping that it's going to come back up. See, the difference between a scalper and someone, let's say this. The difference between a scalper and a day trader is a day trader is going to give their trade a little bit more wiggle room, okay? They're going to give that stock or index or whatever commodity or crypto, whatever you're trading, Forex, it doesn't matter. They're all the same. They all, have candlesticks. They all move up and down. A day trader is someone who's going to normally use a bigger time frame, okay? And normally they're going to give that stock more room to go up and down and have a bigger zone that they're playing off of, versus a scalper is someone who is looking to have a precise entry, but also have a precise exit if that trade fails. Okay, so if you do, you kind of understand that? So if, for example, I day trade as well as scalp, when I scalp, I'm going to tell you that I'm going to take 10 contracts of a stock like Nvidia, or I'm going to take 10 contracts of a stock like Apple. If I'm looking to day trade, where I'm going to give myself more risk because I'm going to allow that stock to move up and down a lot more than when I'm scalping, I might use the 5-minute time frame, the hourly time frame, and I might trade 5 contracts. So when I'm scalping, I'm looking to get in, I'm looking to get green, and I'm looking to get out. I'm never looking to catch the whole move. I don't care if the stock moves $100 in the day going up and I only took $2, I'm okay with that. Or I don't care if the stock moved $5 and I was only able to take 80 cents off the trade. That was my intention, was to get in and get green. We'll just leave it at that. So with that being said, we're looking at the 2-minute time frame. We're also looking at the 9 EMA. Okay, so put this on your chart, the 9 EMA. These little red and green arrows that I have on my chart is telling me every single time that the stock closes over or below the 9 EMA. Okay, the reason I'm starting my candlesticks here at 7 a.m. is because if you are going to look to scalp, not saying that you cannot make money in the first 30 minutes of the day, but I would recommend, if you're a newer trader, to at least let the first 30 minutes of the day pass by. Allow the stock to go up, allow the stock to go down, allow everyone to get the excitement out, come into the market 30 minutes after the market opens. Trust me, it'll save you a lot of headache, stress, and money in the long run. With that being said, we are going to look for every time the stock closes over or under the 9 EMA using the 2-minute time frame, and I'm going to show you exactly where you would enter and exit and why. So if the stock closes over the 9 EMA, we would be looking for a potential scalp long. Okay, so we would be looking for a potential scalp long when and if the stock closes over the 9 EMA. In this particular case here, the triple Qs, and this is from today, and today is June the 3rd. The stock closes over the 9 EMA at 7:06. However, there would be no entry for a scalp position because we need one thing to happen in this strategy and one thing only. We need the top of that wick to be confirmed, meaning price action to take that out on the next candle. And that does not happen here. However, we do get a short setup where we close under the 9 EMA at approximately 7:08, and this candle does confirm below. So at this current time, the price was $309.24, and the stock price in 2 minutes dropped all the way down to $308.21. Guys, I want you to think about that for a second. Okay, I really want you to think about that for a second. If you are a scalper, okay, if you are a scalper and you got a $1 move on the stock, okay, I'm going to repeat that again. When we closed below the 9 EMA, the current price of the Triple Qs ETF was $309.22. 2 minutes later, it drops to a low price of $308.21. That is a $1 move in 2 minutes. Okay, so as a scalper, you are not looking at this trade and thinking, I wonder if we're going to go down to $305, which is the low of the day. Or I wonder if we're going to be trading at 306. If I enter here at 309, I wonder if we're going to get to 308. Or you would not be saying to yourself, well, I got into this trade at 309.20. The stock is currently trading at 308.20. Let me see if it just go ahead and runs another dollar. You do not tell yourself that, because in the game of scalping, this could quickly reverse and it could trap you and rip your face off within the matter of 2, 4, 6, 8 minutes. Okay. When we are scalping, we are looking to get in. I'll just use myself as an example. If I was going to trade this setup, I would take 10 contracts of the Triple Qs ETF. I would buy 10 contracts that are in or at the money. What does that mean? I am looking to buy my options contracts as close to the current stock price as possible. I am not looking to get in this trade at 309.26, and I'm not looking to buy 305, 304 strikes. That's ludicrous. It's crazy. You're too far out the money for trying to scalp. Now, if you're trading stocks, if you're trading, just one to one, you're trading equities, then by all means, you're just going to get in here. You're going to take your dollar move. You're going to get out. You're going to look for another setup. You're going to get out. You're going to get out. You don't have to worry about options, premiums fluctuating all over the place. You don't have to worry about that. Stocks are obviously, and equities are going to trade one to one with the current price at that time. We're talking about options. If you get a dollar move on 10 contracts that are in the money, okay, you are looking at a 40-50% return in a matter of 2 minutes. A 40-50% return on a matter of 2 minutes. Now, obviously, different things are going to play into account with that. On what is the implied volatility on that? How long did that move take? Maybe it took 2 minutes. Maybe it took a minute. Maybe you got in 30 seconds later. Did you accidentally hold too long and you got stopped out and you didn't sell? Now the contracts are getting completely blown out. Did this trade just kind of trickle around within a 10-cent range for 20 minutes? There's a whole bunch of different things that can kind of get in the way of that. But the overall macro picture of what we're talking about here is, realistically, if you would have entered in at 309.20, you could have essentially sold $1 down in 2 minutes. Now, if you're going to do this and you're going to want to make money scalping, it's all about taking small profits, very, very small profits. We are, like I said, not only did this move at 309.22 go all the way down to 304, which is a $5-6 move, $5 move. We're not thinking about that. And if you're a scalper, you cannot be thinking maybe it goes down another dollar. Because the minute you start saying this trade worked and it's in my favor for $1, is it going to go down more? Is the time and the date you're going to get snapped back on, and it's going to slap you in your face and go the other direction for $2, and you're going to be at a huge disadvantage loss. Okay. So if we're trading this strategy, what is going to be our stop loss? We have 2 areas that we can use as an absolute stop loss. 2 areas as an absolute stop loss. Okay. If this is a candle that closed below the 9 EMA, okay, if this is a candle that closed below the 9 EMA, you can set this up one of 2 ways, and it all depends on you as a trader and how much you're willing to risk. If the entry price we already know is going to be 308.20s, somewhere in that range, okay, 308.20s, we can see the top of this wick is sitting at 309.40s, okay? So you're either going to tell yourself, I'm going to give myself a $1.20 risk on this trade. If this trade goes down a little bit, wicks up and snaps over 309.47, I'm out of the trade. There is no questions asked. You're out of the trade. You're looking for the next setup. Remember, you're a scalper. It's about the next 1,000 trades, not about this one trade. Okay, we are trying to take small profits, and we're trying to do it at a very high win rate, and we're trying to do this over and over and over and over and over again. The only thing that gets in the way of someone being a successful and consistent scalper is emotions. You get into the trade, it quickly goes into your favor, it snaps back, and now you don't want to sell. Okay, you're sitting there and your ego's getting to, and your pride, you're holding on to pride. Okay, if you want to be a successful day trader, or you want to do this consistently, and you actually want to make money in the stock market, not just donate money to the market makers and your brokerage account and to whoever else sitting on the other side trading against you, if you actually want to make money in the market, you need to have no pride. Okay, just get rid of the pride, get rid of your ego. Do not think, just react. If you simply react to what is going on the price action here, and you simply tell yourself, if I can do this and make $1, now mind you, it's not going to be a dollar move every single time. It's just not. Sometimes it might be 40 cents, sometimes it might be 50 cents, maybe it's $2. In this particular situation, which obviously going through this back test was a dollar move, okay? If you get a dollar move, that's more than enough. I would be thinking about selling at 50 cents, at 60 cents, at 70 cents, at 80 cents. Oh my God, this hit $1. This is a home run. I'm out. Okay. Now you can do one of 2 things. If you have an account size that you're able to trade, 10 contracts on, then maybe getting a dollar move in your favor and making $200, $300, $400 in 2 minutes is enough for you. Okay. Now maybe you have a smaller account where you can only trade one options contract. Maybe that's only, or one options contract at a time, then maybe that's only $40 or $50. Is that necessarily a bad thing? Absolutely not. That's a great thing, because if we can find the next setup and make another $20 or $40, then we're doing great, right? So in this one particular trade here, it ran, let's just use one options contract as an example. You bought one options contract here, it runs down $1. You would have made anywhere, and just from my experience and just kind of knowing the way that the triple Qs options are going to move, you would have made somewhere between $30 and $50 on this one particular trade in 2 minutes. Okay. If we were to take that $30, for example, or $40, for example, and waited for the next setup, not only did we get the next setup in 4 more minutes, but we got the next setup to confirm at a price of 308.36, and literally it ran all the way down to 306.51. So between, the next setup was 308.40. You can see all the way here on the right hand side of my screen. I'm trying to draw this line here. 308.30s, 308.40s, all the way down in 2, 4, 6, 8, 10, 12, 14 minutes to a low price of 306.45. Guys, that is another $1.50, $2 move in your favor. I am telling you right now, even if you would have only played one contract, respected this strategy, understand the thought process of I'm going to get in as long as we stay below that 9 EMA, I'm going to hold this trade. The minute it starts going back up against me, I'm going to sell and take my profits. Trading one contract, you would have made over $100 to $200 within the matter of 20 minutes. Now, if your account size permitted it and you're able to take a couple more setups, then maybe you can go back and take a couple more setups. But I will stress to you guys and emphasize this. As a scalper, you are never looking to hit home runs. You are just looking to attack a good technical setup. You're looking for that contract within 2, 4, 6 minutes to immediately speed up and go in your favor. And if it does not, and it goes against you, quickly just exit that trade. Quickly just exit that trade. However, if you get the move to go in your favor within 2, 4, and 6 minutes later, and you're up 50 cents, you're up $1, and it obviously in these examples that I just showed you guys, $1, $1.50, $2, take the money and run. Turn your computer screen off, call it a day, come back tomorrow, and we do it all again. I hope this video helps you guys, and this is how you guys can make money consistently if you stay disciplined and if you stay focused and if you leave your ego and your pride at the door. How you can stay consistent, winning both long and short in 2022, even in a bear market.